Yeah. Bullet dodged, right? Can you imagine? You have to play music on hold. Experiencing technical difficulties. Right. Did we go over this one? Base defense rule? I think we did, right? All right. For Bechdel. All right. Welcome back, everybody. The baton death march of technical analysis continues. If you're suffering from deep PTSD overload, you can fill out a form with Monica. We haven't even gotten to the charts yet. You guys feeling good? Is it a little bit too much information, or you guys are processing? All right. Thank you, sir. May I have another? Wow, John's on fire. I don't know you like that, John. All right. Anyways. Full send. All right. Dude, John goes deep. He studies his stuff. He's, I think, the most dedicated trader in this room, man. Hey now, Lance. Is this boring for you, Lance? I know you've done your own profile adventures already. Okay, good. Whenever I design a new course, my chief concern is it going to piss Monica off? Is it going to bore Lance? Those are my two concerns. I think we're dodging a bullet. Those are important barometers of success. All right, traders, welcome back. We continue the slow death march of technical analysis here. We're still on the 21 rules for volume profile analysis, and we're approaching rule number 15, I think. The late day lower B bulb. Okay, so the late day lower B bulb after early P-shaped profile shows two things. Failure of the bulls to create sustainable reaccumulation zone, and two, formation of lower B shows support at the lower end of the range. Range-bound price action most likely in the following day. That's a big generalization, so we need to talk about it. All right, so you have your big bull breakout on the day. By the way, everything I'm talking about, okay, if you have a bearish day, okay, you build a bearish B-shaped profile here, okay, and then you form a bullish B-shaped profile here. It's the same thing. Any of these concepts you can invert, twist around. They're going to work in both directions. Okay, guys? So oftentimes we'll start the day off great. Okay. We'll have a strong move, and maybe you hit known overhead supply zone. One of the things we're really good at in this room is targeting, understanding the most likely, roadmap for a specific move, right? So you've got, you start the day off, okay, and you're feeling good, you're sitting pretty. Okay, I'm drawing the profile next to the pattern here. Okay, you got a nice B-shaped profile here, and here you have an overhead supply zone. For example, you have an overhead supply zone. Okay, and your oscillator is overbought. Okay, you're overbought on the oscillator, and your ATR is at max on the day. Okay, everything is telling you you're probably done for the day. So oftentimes, okay, you'll fail to hold value. Let me just draw this here. I'm going to draw this in pink for you guys. So oftentimes, you'll have value area high here, value area low. I'm going to make point of control blue for you guys. I should probably standardize on these colors, come to think of it. Okay, so oftentimes, right, you'll be up and down. You'll be building volume. You've got point of control right here, right? And you'll either have a liquidation break or a shakeout bar that comes back, fails point of control, and right, you'll either trend lower, okay, or you'll just come into a known area of support. Maybe you'll have your daily 200 here, or your trend line, okay, whatever technical indication you have of some area of interest for buyers, okay, and you'll quickly start to build a lower B shape down here. Let me do this in green, so I've caused enough confusion as it is already today. So you'll start to build a B-shaped profile here. Okay. Just to rewind here a little bit, okay? All of these rules, like obviously recognizing what's happening and building that skill is really important for me as a goal in terms of relaying this information to you guys as far as technical analysis is concerned. But another really important goal for me, okay, is that you guys have a really clear operational roadmap, okay, in terms of what to do, and more importantly, what not to do, okay? So I see this all the time. You guys, you'll print a late day lower B node into an uppercase B, and for some reason that I don't understand, okay, you'll be buying it for an overnight just because it had a big breakout earlier. How likely do you think, if you're not reason me them, how likely do you think that you are to gap up if the bulls fail to rotate between value area high and low in the P shape? How likely do you think that is to gap higher if you have a failed rotation and you build value much lower? This is usually a significant failure of the bulls in the short term. Okay. Now, this pattern with a gap up is the stuff that Tricky Dick dreams are built of, right? When you end up gapping up above this and holding value area high on a two-wave corrective polarity shift, okay, it's usually on like Donkey Kong because you trapped a whole lot of shorts, okay, and you may be dealing with a really nice pro gap. However, in terms of your operational actionable roadmap, okay, if you're buying that close, okay, you're betting that the least likely scenario is the scenario that's going to happen for you because you're special and amazing and you've got six-pack abs and you're able to tell the future, okay? As far as I'm concerned, the only person with a crystal ball is Kathy, okay? That's a different story. So it's really important for you guys, as you absorb this information, okay, to start incorporating it into your operational roadmap. And your operational roadmap is different for every single person here because you have different trading styles, different trading plans, okay? But in terms of expectancy and what's most likely to happen, I really need you to incorporate how profiles are built intraday so that you can place yourselves in the most likely scenario with the highest edge. Are you guys picking up what I'm putting down? Yours says the same. Okay, that's one way to do it. All right, so the rule goes as following: the lower B bulb, late day lower B bulb after early P shape profile shows two things: failure of the bulls to create a sustainable reaccumulation zone. Right, the bulls failed to rotate at some point value area low, okay, and then flushed through the volume gap most likely. Okay. Now, if you transact a lot here, you'll end up with a D shape, but that's not what's happening here, right? You're flushing through and creating a lowercase a lowercase b after the uppercase P, giving you an uppercase B. Okay, that is just the sign of not only a failed rotation, but a quick transition from the original reaccumulative structure into a profile that looks bearish into the day's close. Okay, so what's important about this one? Okay. Clearly, there's a short to be had here. When you crack value area low and you fail to get above it, there's always a nice short here, okay, into thin structure. That goes without saying, and we take those trades all the time. The importance here, and we're gonna see some examples of this one, okay. The importance here is that you have to. You really have to observe the value creation, because it's going to give you very important clues as to what you can expect the following session. Okay, a lot of times when you're in an uptrend and you put in a P-shaped profile that turns into an uppercase B, okay, the next day you're going to try to rotate back to this prior value area, especially if you're at support, you're at anchored VWAP here, you're at the bottom of a trend line, okay? And the bulls get slapped down, okay? And you either get a range, okay, or you get a V-top and a failure below the bottom of the V, and you get a full-blown reversal on the daily. It's impossible to predict what a B is going to give you the next day. What's important for you guys to know is how to path this moving forward, okay? For example, if you have an ascending triangle that starts as a P here, okay, and comes back to test these levels a lot, okay, and gives you a B, okay, it'll sometimes, instead of breaking the ascending triangle, it'll gap lower and try to shake out whatever value area low you had here, okay, and it V's out, platforms, and goes. Despite the bearish nature of this profile, okay, if the auction overcomes the shakeout, okay, it becomes a very bullish context if it holds prior value area low on that first pullback and starts to go higher. Why does this become super bullish all of a sudden? Correct, Fed Trader. Everyone who's been shorting fair value up here is all of a sudden wrong, right? And it creates what? In terms of auction market theory, what does it create that pushes price higher? It creates an imbalance, okay? So you don't know really, okay, until this happens, that you have a bullish operational plan here. At the same time, okay, if you open, say this is day 2 right here, okay? If you open here, okay, and you quickly sell off beyond this high volume node, is there an actionable short back to the top of this B here, and maybe even value area low on the day? Is that an operational, actionable type of trade? Yes. Is adding a short to the lows here an actionable high probability short? Absolutely not, right? So what you've got to work here, is the volume gap, okay, and value area low. Now, if you fail the edge of this high volume profile node at the bottom, you could have an ABCD type of move, okay, like that. The most impressive of all of these shorts is when you catch the short through the volume gap here, okay, you cover some and you get through and then you fail. You have a failed rotation back, okay? This trade is a killer, okay? In my experience, when we get in an uptrend, a B-shaped profile, unless you have a strong catalyst and you're in a very overbought condition, you don't get the ABCD right away. The more likely outcome is that you're going to be in a range doing what? What is this range going to accomplish as far as value is concerned? Correct. The market likes to fill in every hole. It's going to turn this into a balanced profile until enough transactional volume has transpired, okay, to fill in this transactional gap, okay? And in most cases, especially if you start transacting at the upper end of the value area, okay, what you'll get is a breakout in the prior contextual trend, which in this case is higher, right? You're coming off an uptrend here. You're P-shaped. You're all excited. Buyers cannot hold the reaccumulation. They close into a high volume node, okay? Maybe they fail the ascending triangle, okay? And once that happens, if the ascending triangle breakdown cannot take this value area low, okay, you're doomed to rotate and generate enough transactional value to fill this volume gap into a D-shaped profile. Okay, make sense? All right. Well, it's lowercase d. That's a new one. All right. Anyways, so the late day lower B is always, for me, a sign that the strong trend upward and the reaccumulative P-shaped profile, that party is over. It doesn't mean there are no opportunities coming. There are several actionable roadmaps here that are deeply remunerative. Okay, you can short the if they can't hold the prior day's upper high volume node here. Okay, you're going to see here very likely a move through the volume gap to value area low. So that's one. If they break it and give you a tricky dick, that pullback is killer. Okay, and if not, you have a range to work with. That range, okay, this when you're in this range type of range after a B-shaped profile, uppercase B, okay, it's very administrative. It feels slow, okay, it feels range bound. And what the market's doing is it's just filling in a hole. A lot of you guys like trading this chop. It's not for me, okay? I just want you to be aware of what the market is doing, and you can decide whether that trade is for you or whether it's something you'd rather, this is something you'd rather do, like getting a root canal or something, okay? Okay. All right. This is one of my favorite shorts. This next one. This goes to all the bears out there. Okay. So strong P shape on day one. Strong P shape on day one. And then you get a piercing reversal. What's a piercing reversal, guys? So this is the pivot high. You open higher. Okay. and you pierce lower through the value area low. Okay. When you have this kind of piercing reversal, what happens to all the longs in this reaccumulative structure? What do they want to do? They want to find religion. They want to get out. And all of a sudden, okay, you're looking for prior points of control of value area lows on the prior day. Okay. So if this is day one and this is day two, technically it's called day two. Here, probably should be called day three piercing reversal. But that's what ends up happening. Okay. You end up rotating and looking for value much, much lower. Okay. Tesla. Some of the Tesla piercing reversals are brutal. NVIDIA too. You get some gnarly ones. Okay. So very, very powerful reversal rule. When you pierce off of a P shape on day two, and you take out that very high value area low, you're going to trigger a lot of selling early, because those people who bought the close, the people who bought the value area low, people who bought point of control are all in not a very happy mood. They're looking to get out, okay? They're fearing the reversal, which often becomes a sort of self-fulfilling prophecy, as many things in the market often do. All right? Is that one clear? Stop out and sell. That is correct. Perfect. Okay. The P-shaped short covering thrust retest. Okay. So, when you're in a bearish context, okay, and say you go into an oversold condition, you got a selling climax here, that first up thrust, okay, usually looking for a 618 or a 786 retracement, that short covering up thrust comes along with a lot of baggage, guys, okay? This up thrusting move here will often generate a beautiful, beautiful P-shaped profile. It's gorgeous, okay? Why does it create such a beautiful P-shaped profile when you have a selling climax and an automatic rally? The keyword is climax here, aka I'll have what she's having. Price is overextended, and what are you out of, John K? You run out of sellers, correct, right? So you end up getting, I'm going to make the profile green here for you guys. You end up getting, on a lot of these short covering moves, okay, a gorgeous P-shaped profile. Now, is it fair to say that you're not necessarily out of the downtrend just yet because you had a short covering rally? Is it fair to say that? Absolutely, right? So the market oftentimes, okay, when you have a selling climax and you're in a deep oversold condition, that's what have you ever heard the saying that the best rallies are bear market rallies? Have you ever heard anybody say that? Very common saying. This is why, okay? Here's the problem, okay? Like I always say, okay? Sometimes it's a rabbit, okay? Sometimes it's a hare. Sometimes it's a market maker looking to take your head off, okay? This P-shaped profile, okay, is not one you buy into the close, okay? When I see a short covering rally off of a deep climactic oversold condition, I'll play this move intraday because it's an obvious short covering rally. Once the fervor is over, once the shorts are done covering the security they're trading, do you have any guarantee that artificial pressure coming from shorts covering is going to metastasize or transform like a beautiful chrysalis into an actual two-wave corrective or a follow-through day or anything like that. Has any kind of accumulative cause been built here to actually attain those means? Not really, right? Until further notice, this is, Wyckoff 101. You have your selling climax here, and the context is downtrend, right? What happens most of the time when you form a balanced range in a downtrend? Are you more likely to accumulate and go higher? Or are you more likely to, after an upthrust, to continue trading lower in the trend? Absolutely lower, right? The problem, especially with a lot of neophytes to trading who are attracted to these big bars, and especially when you know too much, you know a little, you know enough to be dangerous. Ever hear that saying? A lot of people will confuse this P-shaped profile, okay, for the beginning of an igniting move without realizing that, the market gave you an automatic rally, okay, but most likely when you're in a range, what's going to happen 80% of the time? No, stupid. What's going to happen 80% of the time? You're going to rotate back into the range, right? If this is a D-shaped profile, you've got a balanced range. Most of the time, okay, these are going to be heavy B-shaped profiles, right? Because you're coming off climactic downtrend, okay? And this move higher doesn't do a whole lot of volume down here. It does some volume up here, okay, while the shorts cover and build value here. I've seen a lot of you guys get excited about a really nice, the market, if this is the profile, the market on the 5 minutes looks like this, okay? You're like, okay, we got igniting move. We have nice, healthy volume profile, and we're closing into a, contracted state. Let's buy this for an overnight. What's the problem? What's the problem with a P-shaped short covering up thrust? You're in a bearish context. You have overhead supply. What else? Do you have any evidence whatsoever that the lows of this profile have been tested enough to truly reject them and build an accumulative cause that's actually going to reverse the market? Do you have anything? Do you even have an hourly higher pivot low? You have no structure to work off of, right? And yet, a lot of traders will make this fatal mistake. If I wouldn't do this for I wouldn't take this overnight for CT's mustache. Okay, even if you threw in Andrew's ponytail, I still wouldn't. I wouldn't take this overnight. Why? Because you're in a range that's most likely going to want to retest the lows. Okay, so it's a pretty dope mustache. So what I expect to happen here is at least a 50% retracement off this P-shaped profile, especially if you have an LPSY here, okay? If you have an LPSY here, okay, that formed an overhead supply zone, okay, the likelihood of the market just poof going through here, very, very low, okay? Now, what's one thing that may make one of you guys may make you want to buy this anyways? What would be one thing that would change all that? Correct. If there's a fundamental change in how agreed. If there's a fundamental change in the way the market is actually pricing the move, okay? If there's a fundamental change in the way the market is pricing the move, what's going to happen, okay, is you're going to start trading and finding value higher because in terms of the auction, the fundamentals of whatever you're trading will get repriced. Okay, you'll find we have some examples of this, like the Trump tariff pause thing. You had P-shaped profiles all over the place. What happened for the next 2 days? Remember, guys, what happened after the beautiful P-shaped profile on the 9th? You had 50% retracements all over the place. Novices got murdered right to point of control, right? And then you had your point of control polarity test that worked on a bunch of stuff. And then, and then the market finally built a sufficient accumulative cause to actually go higher, okay? So why is this important, okay? So say this is day one, right? Day one of the short squeeze, okay? And you took it, you feel great, you made zillions of dollars, okay? You're feeling like a rock star, and you go, you know what? Going back to the biases and fallacies and cognitive parallax, you tell yourself, I'm just going to play with the house's money. Let me take 2,000 shares or 4,000 shares of Tesla overnight. And, obviously we got, the short squeeze is on, the pause is in, whatever. It's liberation time, whatever it is you're telling yourself, okay? The odds are on the first short covering, there's a reason it's called an automatic rally, right? The market comes in, shakes out, and pops right back to the top of that value area. The likelihood of having continuation here is really, really small. So in terms of your actionable roadmap, this tells me what not to do, okay? Super important. But also, it tells me what to do. If we gap above here and I see weak prints, all right, I'm looking to fade this move to point of control. And if it breaks point of control, I'm riding this baby till the wheels fall off, okay? You understand what I'm saying? So this isn't just a cautionary rule. It's also highly actionable if it happens to gap up or open at the close and start selling off quickly, okay? Because market structure here and profile are both telling you that this is most likely unsustainable. Oh, you got to run? All right, Andrew. Have a great one. Have a great one, bro. There's a 50-50 chance this is being recorded, so it should be fine. For the R-rated version, you can use Monica's recording. All right. Anyways, so P-shaped short covering thrusts are incredibly dangerous. Okay, especially you had a bad day. Okay, you missed this move. You're full of FOMO. I can always tell when we have a short covering rally which people missed the move because they're all asking me about the overnight. And I'll say, I wouldn't take this for all the tea in China. I wouldn't take it for CT's mustache on a platter. And a bunch of you guys end up taking it overnight anyways, and you get smashed. Okay? This is why, guys. The cause has not been built. You've got the LPSY supply, and you have unfinished business down here. Okay? All right. Are we everybody understanding this one? Does that make sense? Are you picking up what I'm putting down? All right, perfect. All right. Oh, it's on the house, Wilson Jason. Yeah, I'm just kidding. You're not an idiot. You're just very badly behaved. It's a different problem. All right. So that's the P-shaped short covering. This is an important rule, guys. Okay. Do not be fooled by a P-shaped profile. Sometimes it's not a hair. Sometimes it's an ugly turtle or whatever. Is that the dash on an airplane? All right. Anyways. All right. The double top high volume node rule. No. It's some people use it interchangeably. Okay. All unfinished auctions are unfinished business, but not all unfinished business is an unfinished auction. So there's oftentimes the market will want to retest. Okay. I'm going back looking for my drawing as if I hadn't deleted it. That's brilliant. So, for example, you're here. You are here. Okay. You're here. Okay, and okay, you have a markup in the market. Okay, and you create a new balance range. Okay. The inability of the market to rotate into a prior value area is an unfinished auction. Okay. That's an unfinished auction. When I say unfinished business, okay, what I'm referring to is a level that, in my opinion, must be retested for a cause to be completed. Do you guys understand the difference? So, okay. Unfinished auctions are unfinished business, but there's a lot of other types of unfinished business. Okay, like you've got a strong P-shaped profile here, okay, and all of a sudden, you get really, really weak order flow, okay, and you've got a high volume node here, okay, and a rising 21 or trend line. This is some unfinished business. It's going to get tested if the bulls can't sustain a bid at value area low. Okay. The problem with auction market theory and market profile is a lot of people use really similar terms and mean different things, so it can get confusing. I apologize. All right. So that's we didn't even get into this one yet. The double top high volume node rule. The high volume node into double top weak technicals or topping tails, likely a short. So a lot of you guys really, really like to take the retest of a prior high. Now, is this technically a double top in terms of pure technical analysis? People call this a double top. Is it really a double top? No. Why not? Why is it not a double top? Yeah, until it takes its neckline out, it's not considered a double top. So, some people call this a potential double top, a prior high retest, whatever it is you want to call it. I just use double top here as a short notation, but it's technically not a double top yet. But, okay. A fatal mistake a lot of traders make, okay, is they'll fail to do two really important things. One is they'll often fail to note that you have a very, very high volume node right into or at that double top, okay? And that oftentimes you're ascending into that double top on very, very weak technicals, okay? When that happens, a bearish retracement here is an almost technical inevitability, okay? But what you have to really put together, guys, is the combination of the volume profile with weak technicals. What am I talking about? On the order flow side, I'm talking about really strong delta divergences. On the other technicals, I'm talking about, maybe you're right at an anchored VWAP, or you're right at, a 15-minute 200, like something really bearish you don't want to F with, or you're looking at a major oscillator divergence. Your oscillator is at the high, like right here, and you're below the 70 line, okay, as you hit this on poor volume and extremely weak delta divergences. You guys get the idea, okay? These are not the droids you're looking for if you're looking to take a break at day highs. Okay, you're looking at least a 382 retracement here, like a 5-minute 21 or something like that. Have you guys noticed how many times I short rising wedges, double tops, or base breakdowns into the 5-minute 21 and how often it works well? Okay, that's a fantastic retracement level when you're overextended, especially if you've got both delta divergences and oscillator divergences. This is a money trade. Now, getting back to the operational plan here, the actionable plan, if we take out the prior point of control and have POC polarity, okay, what are we looking at now? Yes, Ash. Correct. Following RSI, yep. Weak technicals, meaning low volume, cumulative volume delta divergences. I look at everything. I look at up-down volume for the market. I look at decreasing advanced decliners. I look at oscillator divergences. Those are all technicals I'm looking at. Okay. If we have a break of this neckline here, okay, and we hold point of control, does that change our operational plan at all to short into a 382 or maybe even a 50% retracement? It certainly changes mine, okay? If we're able to auction above this prior pivot, okay, and we're holding that prior point of control, I'm thinking the shorts are going to get squeezed good and hard. Okay? Does that make sense, guys? But I do need to see bids holding above point of control, okay, and I need to see volume and technical start to move higher. Okay, makes sense? Especially you start to see your oscillator curling higher. You start to see advanced declines move higher. Okay, you start to see your volume delta improve on that first move higher. Okay, that's when it's go time, and you're taking the Buick for a buy setup into a next leg higher. Okay, shorts are getting squeezed here. Okay, because they were, I'm gonna draw this red. Okay, they were thinking this was fair value to sell. Okay, and they were looking for that retracement into maybe a moving average or whatever it is they were looking for. This was fair value for them. Okay, once you break above fair value and hold point of control, okay, it's a different ball of wax. Are they in control now? Because remember, here they're confident. Here they are worried. Okay, here they have hope. Here, okay, they're finding religion. Okay. And once you take out these highs, what do you think those shorts are going to do? Okay. So there's a lot to this, but the main thing I want to impress upon you guys, okay, is if you're going to short a strong high volume node into a potential double top, okay, you need to make sure that all of your technicals are aligned, okay, and that you're not shorting into a Jack and Buick. Make sense? No, it does. Okay. Oh. Okay. Okay. The double whammy. The double whammy rule. So if a gap up on day 2 fails prior day's point of control in intraday or 2-day anchored VWAP, short-term trend may be over. This also happens, guys, at the top of channels. Okay, I'll explain. Also true for structural breakouts. Example, neckline at point of control failing invalidates in percent shoulders, ascending triangle, etc., etc. Okay, so oftentimes, okay, you'll be overall in a super strong bull trend. Okay, and you're going like this, and you're going like this. Okay, you've got a really good angle of ascent. Okay, and so you got day one here. Okay, and you got a let me make this a little bit higher, okay? And maybe you haven't really charted this properly, okay? And you're going like this, and you buy this gap up thinking, trend continuation or whatever, and then that day two gap up fails into the prior point of control or the 2-day anchored VWAP, okay? Here, in a channel, when this happens, guys, where's price going? And we see this every day. Where is price more likely to go? For sure lower. In a regression channel, where are buyers finding fair value? It could go sideways. Bottom of the channel. Yeah, exactly. So, the double whammy may just bring you back to the bottom of the channel. But in the meantime, you've taken a pretty bad loss, okay? So oftentimes, you're in a super strong bull trend, but you're taking that day two into an upper line, into a 200, into a prior structural overhead supply zone, okay? And the first thing you need to look at, okay, is am I taking that breakout into a point of control that's going to be violated, and then once this is one of the basic rules of auction market theory, right? This is day one point of control. Once that point of control is violated, you're likely to see value area low. If you can't sustain the value area, right? One of the 5 templates we talked about in terms of rotation. Remember from like the first 10 slides we did today? Okay, you get this template. Okay, that's what the double whammy rule is. Make sense? So if you're in a bull channel, the good news is the trend will probably continue higher. Okay, but in the meantime, you're getting slodged here. Okay, you're getting whammied over the head. So if you're in a bull channel, watch your trend lines. If you're This seems like it would be true even if, yes, John. But what makes it such a powerful setup, especially for shorts as a fade, okay, is that you're in a bull context with a lot of trapped longs from day one of this sequence, right? And the late money longs, okay, trying to build value above point of control, relinquishing it and triggering the stops all the way down to fair value, which in a bull channel is going to be that higher low at the ascending line. Upward channels are bearish? Really? I don't consider upward channels bearish. Are you being ironic? My sons do that all the time. They're like, I'm being ironic, Dad. Okay. Downward channels are bullish. I will agree to disagree. Okay. So really, really powerful. Okay. That 2-second day gap up failure to rotate out of point of control and higher, okay, is a killer short. Okay. Johnny Seville, Ecomoth patterns and probabilities. Okay. I mean, there are certain ascending patterns that are distributive. Okay, so for example, if I see an ascending pattern like a rising wedge, okay, or a very weak, low-angled rising channel within a distributive context, okay, I will call this a bearish rising channel because contextually the technicals are weak. Okay, maybe you're rising on lower RSI and lower committed volume. Okay, and so on and so forth. Your cumulative volume delta is weak, and you're in a contextually bearish roadmap, right? So a lot of the channels you see that you think are reversals are actually just bear flags forming. So there is such a thing as bearish rising channels, but I would say that generally speaking, for me, and I only speak for me, Green PJs, rising channels are usually bullish. So just my opinion, my 2 cents, not trading or barbecuing advice. You do with that what you will. Okay, so that's the double whammy rule. The stacked POC rule. Okay, all right. When you have stacked point of controls and uniform training angle of ascent, pullback to prior POC may represent a strong buying opportunity. Uniform angle of ascent is key. Anchor VWAP, strong confirmation. Okay. So oftentimes, guys, you'll build these boxes, of price action. Okay, they almost look like Darvas boxes, right? And you'll be, your points of control will stack up higher as you go. Okay, the rotation to a prior recumulative point of control when you're pulling back in a channel is often a very strong buying opportunity. So, people ask me all the time, you've reached exhaustion. I'm sorry. Are you guys totally shot? No. Yes. Maybe. So, yes. Okay. So the good news is this is being recorded. I think I have a little bit longer till my my babysitter puts out a bolo out on my head. So we're gonna go a little bit longer, and then we're gonna have to break for the day, anyways. So, yeah. Sorry, I'm wearing you out, Green PJs. It's a lot of information. So, anyways, stack points of control are really, really helpful. Okay, because they'll often give you a strong reaccumulative high volume node to buy a pullback in, especially, okay, if that high volume node intersects with anchored VWAP and moving averages into the lower line, okay, lower line of a bull channel. You see that? So the stack POC rule, okay, is that as long as I have structural and anchored VWAP confirmation, the moving averages are heading in the right direction, that pullback to a strong reaccumulative point of control is a buy. Okay, it is a bullish opportunity. Now, oftentimes, if you don't see it hold, clearly the trade idea failed, but it is a general guideline or rule for me. All right. Okay. All right. The chrysalis rule. This is my favorite overnighter. Okay. So oftentimes, whoa. Oftentimes you have you start the day slow. Okay. So this is especially true. Okay. This is especially true of accumulation patterns, okay? So say you're coming off of a strong downtrend here, okay? And you've reached your selling climax, okay? And little known fact, you're actually building structure for an inverse head and shoulders and a potential neckline break here, right? But oftentimes that initial leg of your selling climax, if it doesn't build, I'm going to do this in a different color. If it doesn't build a new balance range, okay, in a balanced D-shaped profile, okay, oftentimes that selling climax will begin to build value in a different structure, an accumulative structure like inverse head and shoulders, a V-bottom in a platform, a V-bottom in a wedge, or whatever it is, okay? So what I look for here, guys, and this is where you want to either have nested profiles or multi-day profiles, okay? When you see that B shape, let me change that. Okay, let me make it blue. Okay. When you see that B-shaped profile here, okay, bounce and create the V-bottom, okay, and you create a high volume node, and at one point the point of control is going to be here, right near the V, right? This is your climactic selling. Shorts are pouncing, longs are selling in a panic, right? This creates what? It creates high volume nodes. It creates a lot of value, right? Everyone is going in the same direction, okay? But as the momentum starts to shift, oh, you got it, Creepy. It's a pleasure having you with us. Sorry I called you a dude for like a month. I don't know what else to say. My apologies. All right. So this point of control here, okay, will quickly fill the volume gap, okay? Because remember, the market is looking for liquidity and value, and on the panic way down, okay, this is a very, very scant liquidity profile between here and here until you start to get some transactional interest, right? As you climax in terms of volume, right, the volume will look like this, right? Big volume, everyone's chasing, longs are stopping out and selling in a panic, shorts are pouncing and doubling positions or whatever, okay? You will reach that point where this point of control can no longer be violated, okay? And you get that polarity shift, and this upper end of the range starts to build value, okay? And this blue point of control shifts higher. This blue point of control shifts higher, okay, into the upper end of the value area. This is a really interesting exercise for you to do with your fixed range volume profiles, and I have several examples in the chart section here where you're actually building value, and as you build value in the upper end of the range, not only do you see the high volume node build here, but all of a sudden you blink, okay, you move it 2 bars over to the right, and the point of control immediately shifts from the bottom of the V to right near the neckline. Have you guys ever done that exercise where you're shifting the point of control around? Okay. Trying to understand, is there a difference here in P-shape example from the other slide? Is that in this example, there's value built at the lower end? So this. Typically in a selling climax with automatic rallies, you're not going to build a whole lot of value in the initial automatic rally right away. You're going to start to slowly build this in until it turns into a D, and you have a balanced profile. Then you'll have a shakeout later on, and then maybe you'll start building value higher, and then you have your Jack and Buick. You understand, John? In this case, the opposite of that is happening. You're not building a D. You skip this altogether, and within one session, okay, one intraday session, you've gone from lowercase b to uppercase B, and the point of control shifted altogether. That confirms this neckline as a major breakout point of interest. What are all these shorts? your LPSY people here and the people who shorted looking for, failure value area low to go lower. What are all these people going to do when this neckline breaks? Remember, shorts assume that you're going to get some kind of consolidation and the trend will continue lower, okay? And now you got all kinds of jabronis overcommitted here and maybe here, and they tried to short the bottom, right? You have a lot of volume here. A lot of this transactional volume, remember the monkey knife fight rule, right? A lot of this transactional volume is, some people trying to buy the dip, but a lot of it being a selling climax is a lot of people pushing and committing to the sell to open trade, right? So the fact that you're not building a balanced profile here, you're skipping this altogether and moving point of control right near value area high. The structure, the structure is confirmed by the profile immediately. The price action structure created, is volumetrically confirmed immediately. What used to be a lowercase b in one session becomes an uppercase b. And what does that tell us? It tells us that there's no longer any interest in transacting down here, and because the point of control shifts so quickly, do you think that maybe illustrates an urgency of buyers to take price higher? Do you see what I'm saying, guys? The pace and speed where this volumetric structure is built tells you everything, okay? If instead of building a shallow right shoulder here, we start doing this and start building this volume, okay? You've reached an area of balance, okay? The fact that we're rotating the entire range in one day and shifting point of control within one rotation from down here to here, skipping all this stuff, tells you that there's an implicit imbalance in the supply and demand picture, and that instead of getting a slow redistributive structure or a fast or a slow accumulative structure, you're getting an inverse head and shoulders and you're getting a reversal. So you're saying that P shape is slower in the profile? Yes. Yes, Lance. Okay. And what I'm saying here is that unlike the other P-shaped short covering that I was talking about, this actual profile gives you a fantastic opportunity. Even if you don't want to take this as an overnight short, the power of this neckline breaking, given the strength of the sellers and the amount of effort the sellers have put into not only this downtrend, but this high volume commitment to the lows, gives you that beautiful neckline to head measured move in a day or two. Make sense? Correct, Todd. It is an urgent rejection, right? Remember effort versus result? This is one of the key tenets of Wyckoff theory, right? Well, a tremendous amount of effort went into creating this lower base high volume node, and it was undone in one session. And not only was it undone, it shifted the point of control. What's key here, is that you're shifting the volumetric structure and the point of control right to the right shoulder the very next session. That is the sign that you're about to have a major change of character in the market. Remember, you're taught this schematic in Wyckoff theory, right? Where you're going, you accumulate for, you got the composite man and the automatic rally and the retest, and eventually you got a shakeout, and that shakeout doesn't work, so you get a your Jack, your Buick, and then you build another base, and then you go higher. When the shorts are overcommitted, okay, and you change point of controls right to the top of value in that one session, there's a really good chance. There's a really, really good chance, okay, that you're going to be breaking out higher the next day. All right. All right. It is 4:20 in the afternoon. I got to check on my my babysitter and my son, guys. We are done with the rules of the volume profile. What did you guys think? Took me a while to synthesize these for you guys. It was only 19 rules. Leave it to you to count. That's 21, bro. All right. Leave it to Lance, the Jewish guy from Florida. Man, it was 19. You owe me too. FYI. All right. I need 2 minutes to just check on my kid. I didn't think it would take this long to go over this stuff. I'm just gonna step out for a second, okay, guys? There's a chance I can't get this woman to stay any longer, in which case we're gonna have to pause for the day. Are you guys okay if we pause for the day here? I can continue tomorrow or next Saturday. All right. All right. Just give me. You guys prefer next week? I don't even know if Monica's available for tomorrow. I don't want to ruin her Sunday. Next Saturday is better. All right. Give me 1 second, guys. All right, sorry. I just got a death stare from my babysitter. I'm gonna have to cut it short for the day. Hopefully the malaria wears off for next week. It's both, Nadia. So next week we're gonna actually go through a lot of charts, and we're gonna look at all of these rules in context with technicals and the rules of the volume profile. And then after that, we're going to apply the footprints to these rules so we can actually find and fine-tune entries using volume profile and footprinting, which is how we trade every day. You like the little cursor? I'm glad, dude. I'm glad, man. I do this for you guys. It's a labor of love. So glad it's helping. I'm executing through Quantower and I'm using ATAS. I don't know. Well, we got like 100 slides worth of pure charts, and then we got to jump into the footprints. Yeah, I feel like we're gonna start losing people into session 4. It's gonna be on video if you don't show up, I guess. All right, guys. Thank you all for attending. I'm sorry I have to cut this short, but I guess we got a good, we got like 5 hours in, right? No. Yeah, 5.5 hours in. So, all right. If you have any questions, guys, ask Lance. He will be happy to. No, if you have any questions, we can go over it in the next week's training before we start, I guess. After this is all done, we'll do one Q&A session because people have a lot of questions usually at the end of these. Okay. Yeah, I'm looking forward to it. We're going to go through a lot of charts next time, and then once we put the footprints together, I think it's going to start making a lot of sense. All right. All right. Love you guys. Have a great weekend. We will be back Sunday evening at 9 p.m. Eastern for the weekly watch list. Take care, everybody. Enjoy the rest of your day. Take care, everyone.